What's up, everybody? Michael and Coco here to do some technical analysis on the S&P 500. We're going to look at the daily time frame and the 30-minute time frame. Let's get into it. Welcome back to the daily time frame of the S&P 500. If it's your first time watching these videos, I do these technical analysis forecasts Monday through Friday on the S&P 500. On Saturdays, I do my weekly watch list, and then every once in a while, I sprinkle in a quick tip episode. Today, we're going to be mapping out some support, resistance, and we're also going to follow up on yesterday's video. Without further ado, let's just jump in. So earnings week, earnings season has started. JP Morgan and Wells Fargo came out. I believe JP Morgan was better than expected. Wells Fargo sucked. And really, honestly, the stocks kind of held up here at around, I'd say, looks like it's holding up at 3,100. And before I really dive any more deeper into the analysis and support and resistance, I just want to show you to make sure you're aware of just how choppy the current trading sessions has been for this previous week. So as I zoom in on the daily time frame, just look at these candles within this short period of time. Okay, this right here is 1, 2, 3, 4, 5, 6, 7, 8 trading days, and look at it. Red day, green day, red day, green day, red day, green day, red day, green day, and it's been just back and forth, crazy nonsense, trying to find out where the price wants to go. So when you're trading and when you're watching the rest of this video, you got to keep this in mind, the context. There's no clear direction as to where the price is heading at this particular point in time. You get these kind of gap up, move up, then you get a gap down, move down, gap up, move up, and then you get a gap up, move down. Then you have a sideways open, move up, you have a gap up, move down, then you have a gap down, move up. It's just been all over the place. So keep that in mind as we continue this analysis. The main area of support on the daily chart continues to be 3,000 as the floor. That is the bottom here portion of this green rectangle. The green rectangle is the bulls camp. It's a zone of support. And then the red rectangle is the zone of resistance. It does look like the stock market is having trouble getting above the 3,200 area and staying above there. From what I see after a day like this, the price does want to come back and retest the top of this island reversal pattern at 32.36. I hear that a lot of people's eyes are on that 32.50 level. Me personally, I'm watching 32.50 like a hawk in comparison to the 10-year treasury bond, because if I get the 10-year treasury to fall below 0.60, and while the price of the stock market is heading up to 32.50, I feel like it might be a good opportunity to enter into a short position. So that is what I'm kind of keeping an eye on. I feel like it's going to be bouncing around within this area. We've been saying that this is kind of a buy the dip, sell the rip type of market. Earnings season, a lot of volatility, so keep that in mind. You're going to see some choppy waters going into the next few weeks. That is normal. As far as where the price can go, really, we just got to keep an eye on the range that it's at. And from my perspective, the major areas that we need to keep an eye on is really the 30,000 up to 32.50. So that is going to be the zone that I'm kind of scoping in on. If we see pullbacks to this 3,000 range, that'll make for a good buy the dip scenario. If it reaches up to 32.50, I'd say be very hesitant to buy long at that particular time, unless if we get a couple closes above it. So I'll be keeping an eye for a short position up at 32.50. And no, not like a multi-week long short position, not saying that, but it might be a day, a 2-day, or it might just be an intraday trade. I look at those major areas, and as you can tell, the price heading back from late May, it's just kind of been in that trading zone right here between 3,000 and 32.50. Technically, it's a little bit lower than 32.50, but I'm just saying 32.50 because it's pretty much the opening of this big gap from back up over here. So I know that they'll act as some area of resistance. So that's what I'm personally keeping an eye on the daily time frame. I have the wedge still up. The price, the only reason why the wedge is up actually right now, the rising wedge, these purple lines, is up even though it came below it, is because how it interacted on the 30-minute time frame, which we will get into. Other than that, there's not really too much going on with this chart. I want to hop over to the 10-year treasury bond. We talked about this in yesterday's video because I want to show you how it interacted at the 0.60 level. So here's the 10-year treasury bond. This is not going to take a long time. I wanted to zoom in right here and just show you how perfectly it came down to touch on it and then started moving higher throughout the day. So this just goes to the narrative that 0.60 is a huge level of support to watch out for on the 10-year bond. Here's a look at it on the 30-minute time frame today. Look at how it came down, really started moving down into this 0.60 level. It bounced from 0.601 and then really started moving higher. But keep in mind, on the 30-minute time frame, you have the 200 period moving average kind of sloping downwards and the 50 period moving down too. So it's going to take a lot of work for the price of this 10-year to get above this trend line. But if it does, we might see somewhat of a move to the upside in the 10-year bond. All right, so now let's go ahead and just hop into the 30-minute time frame on the S&P 500 to map out support and resistance areas and kind of follow up on yesterday's support and resistance areas. All right, so this blue vertical line right here represents where the day started on the 30-minute time frame. I'm going to go ahead and remove that for now. Just wanted to point it there so you can kind of follow along. Pretty bullish day for the most part, other than just gapping down to begin with. So yesterday it closed right here. We had a decent sized gap down, nothing too crazy. Now we were saying that the first level of support was that 3150 level, and we've been mentioning that for quite some time, saying that it was kind of the Bermuda Triangle. Like, it can't really, it's kind of like a weird magnet at 3150. Like, the price doesn't know what to do around that area. So it did gap down underneath it, and then it kind of came above it, then got, pulled back. And then the next candle that formed kind of got held up there. But the candle that formed was a nice hammer candle after a nice big pullback. So that was a sign of a reversal taking place on the 30-minute time frame. And you did notice a big bump up from that point. As far as the rising wedge goes on the daily time frame, this is why I wanted to kind of keep it. Notice how the price interacted through the remainder of the chart on that trend line. So it clearly got rejected there, and then it kind of held up there, and then when it broke through, it kind of acted as support, and then it really started shooting to the upside with this last 30-minute candle. Also, a thing to note, the 50 period moving average did hold up as resistance and support, so that might be a moving average to keep track of on this 30-minute time frame. An area of support that we mapped out yesterday was 3120, and that was because of the pullback back here in the previous day on July 9th. It bounced from that area, and notice that the price didn't quite reach it, but it was within about $7. So we could have moved this up. Now remember, like, it's typically a zone, but if we moved it up to the basically bottom of this red candle, it did bounce right from that area. So 3120, this range did act as a support for today. And then as far as the resistance that we mapped out, I believe it was 3180 was the area of resistance that we were talking about. And now it's going to be acting as an area of support. That was pretty much the opening of this window, we called it. And then we also said, but we didn't mark it down, we're like, this is also a resistance, 3200. That's the top of the window, the gap that kind of opened up. And as you can see, that's kind of where the day closed. So that is going to actually remain now our area of resistance, as well as the top of, I should technically say the top of the chart, but the bottom portion of the bear's camp right here at 3235. We've been calling it 3250. It's kind of that zone. Now this 3180 level right over here, notice how the price came up and kind of tracked sideways, and then when we finally got the break above it, it really started moving higher in to close the window from this day over here, July 13th. Now technically, July 13th, you also had the gap closed the same exact day, but notice this 30-minute candle, how it acted within that window during today's trading session. So still valid area, and going to be keeping that up. So as far as heading into tomorrow, what is our areas of resistance going to be? Well, it's going to be the top of this bear's camp, or technically the bottom of the bear's camp here at 32, we'll call it 3230, but it's kind of up to 3250 is where I've been keeping an eye on. And then we have 3200, which will act as an area of resistance. It did right here where it gapped above it, act as support, and now it's acting as somewhat of a resistance today on the last 30 minutes of the trading day. Now, as far as support goes, what I would like to do is kind of expand this range just a tad bit. It looks like the price during today's trading session did get hung up around this 3173 level. So you can keep it at 3180 if you want. But notice in the previous history of the chart, it did act as support there. And then today, that's where it kind of got rejected and acted as resistance before it bounced above. And then it retested it a couple of times. So this 3173, you can call it 3170 if you'd like. Maybe it's a little bit easier to remember if it's 3170. I would go ahead and put that as an area of support. You can, if you want a more major area of support on the 30-minute time frame, then we can just go ahead and move this one back up to about 3130, and you can call that an area of support as well for tomorrow. For my purposes of what I do, I'm just going to go ahead and clean up the chart and just have it like this. But notice that the 200 period moving average is down there, and it's looking like it's coming up to that line anyway. And 200 period moving average is that Godfather moving average, so that is going to act as a support because the price is above it. So if you want something past this green line, which is 31.70, I would just say keep an eye right here on the 200 period moving average going into tomorrow and the remainder of the week. All right, so that is what we have on the 30-minute time frame, and then we went over the major areas on the daily time frame. That is all I have for you on today's S&P 500 technical analysis update. See you on the next one.